Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. How we doing in YouTube? Yeah, thanks, Lee. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile, and it's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community chat room. The Trader Lab's a community of traders who've come together to leverage their collective experience. It doesn't matter how long you've been trading, whether you're a freshly minted trader or you've been around for a long time. Everybody has something to contribute, and there's not one way to approach the market. However, the business of trading, there are certain things that are necessary, in my opinion, at least from my experience, in order to actually have the potential to sustain a business or create a career in this business. And it's probably different than most of you think it is. So most retail traders tend to do the same thing, and most retail traders tend to have the same outcome, which statistically is not very good. Have you ever wondered why? And is it also realistic to think that you will be an exception to the probabilities? And the whole point about trading is to understand it is all about probabilities. So that's what the Trader Lab is. It's structured trades, a community of like-minded traders, plus a library of webinars and continuing ongoing support and the leverage of the community coming together to create more. That's the Trader Lab. There's a link in the bottom of YouTube. You're all invited. Now let's get into today. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room. If we get into real time, we'll talk. On the other side of that, it's more important from my perspective that you understand how the market works, why it does what it does, and how you get in alignment with it using structured trades that you can vet, which means that you can determine under specific conditions, does it have a statistical edge? The job of a trader is not to gamble. Leave the gambling to somebody else, or go to a casino, gamble, get the cocktails and the ticket to the buffet, and maybe a Dell. But other than gambling, if you want to be in the business of trading, I believe a different approach from what you're doing now, if you're not a successful, consistently profitable trader, might be something you want to investigate. So that's the purpose of the Trader Lab. That's why I'm here, and I suspect maybe that's why you're here. Who is that guy? Who? Okay, let's go. Now, I'm going to start with the higher time frame. Now, yesterday's stream is really important. And if you didn't watch yesterday's stream, I posted it. I made it public. It's up in YouTube world. Also, if that link is available, it should be in the Bookmap Discord Trader Lab chat. If somebody could post it in YouTube, it is a lead-in to today. Every stream actually leads into the following day. We are building a case of market behavior. Now, we had FOMC yesterday, and, FOMC can be quite volatile. Offers, of course, in our business, volatility is opportunity and risk. So the fact of volatility is not a problem if you understand how to operate in volatility, because as day traders, it is the volatility and the rotations that create our opportunity and, of course, risk. So if we understand how to operate in this range expansion or rotations. That's our actual job, is to participate. And the other part of this is only to participate when you have a statistical edge, and then not otherwise. So let's look at, so first of all, we had this big gap down on the news, deep think, whatever that is, the AI out of China. So this was we had a big gap here, and we went down, it's just ugly. There were body parts everywhere. This is support, and it comes from a consolidation over here. This is the auction. This is how the profile operates. Well, what we know is this might be too low. Now, why might it be too low? Let me just give you an idea. This yellow line and this orange line is the highest volume in this area. That means this is like a retail price, and this is a consolidation. So the high of the consolidation is right there, and the low is here. And then we trade inside it. If we break out of it, then that is saying, this is language, this might be, and I always have to say might because it's all you have in trading, maybe, this might be too low. Now, when you gap and you leave these gaps, they're not auctioned. So the market has a tendency, gap here, over here, okay, the market has a tendency to come down and take out these gaps. And here's the other part of it, gap and take out the stops that are here. And what did we do? Take out all the longs out. Now what? So the market comes down, and then what happens? You've got all these longs thrown under the bus. Thanks for playing. Then we have the gap. Everybody's, forget it. If you're a position, you're holding positions. That's why I'm a day trader. I sleep a little bit better. And this is too low. So the market was down heavy, if you remember. So why did it close up? Because we had new sellers come in on the gap. Well, if you understand market mechanics, which you could learn in Trader Lab, you would understand then that the shorts become the buyers, just like the buyers up here became the sellers. The sellers in the morning become the buyers. So what happens now to the shorts that are here and are trailing their stops, maybe up here, wherever it is? We open, we get new sellers, we come down to the retail price right here on this day before yesterday, and it's too low. Same as over here, it was too low, except we didn't tag it. Life in the fast lane. There's no precision in trading. This is the retail price from this day, our highest volume. So too high, too low, retail. You go to the store. Well, if we open and come down, and it was sellers in the morning, day before yesterday, target was here, there it is, that sets up the low of the day. Don't know, get the reversal, and then what do? Well, where are the shorts? Their stops are here. Now we squeeze the sellers from here, and we squeeze the sellers above here. And that's what creates this. Now, where's our target day before yesterday? Here, 6,100, and here, 6110.75. Fill this gap. This distribution currently is too high. This is what we gapped out of. So all we've done is we came back and checked it. Are you guys tracking so far? How are we doing in YouTube, by the way? How about a like? How about give a thumb up there? So if this is where the stops are at 11.25, then where might we go? So let's look. FOMC, what do we get? Well, it was a selling day yesterday. And the ETH high, if I remember right, was right there at 11, right up at this resistance. So we already had the potential for a short here. It said yesterday this was too high. And then we opened and it set up a short, and it was shorts all day until the end of the day we get short covering. Okay? And what do we have now? Two things. We have longs in the market here. So what does that set up for us today? If the market is long and the shorts are over this high and over this high, where might we go today? The question becomes, are we going to break through here and come up here? Or are we only going to squeeze, maybe get up here, maybe not, and then fail and rotate down and get the longs? Market goes down to go up. The market goes up to go down. The market goes down to go up. And depending on what happens, it might just go up to go down. Or we can keep going and squeeze out the shorts from today. I want to give you that overview. And this sets up our levels. Right here, 60, 78-ish, that yellow line, that's the highest volume from yesterday. That's our quote retail price. 77.50 retail price. So we can rotate around this because it's a distribution of volume. So in other words, I'm not paying that. Yeah, but it's on sale. See? Oh, yeah, you got to be kidding. No. So the retail price is where most volume is done. Think of it like shopping. So this is the fair price. So the market can go to both sides of fair, trying to find what's too low, like it did there, and what's too high, which it did right there. Anyway, if you have questions, please post them. And I can't give you a high-level overview of this. I can give you yesterday's high. This is that high volume retail price I just pointed out. This is the ETH high. Let me keep going here. This is the target at 6111-ish right here, MCLVN. Let me see if I can get this back here. I just want to show you the tie-in. 6111, 6110.75, that's the outside edge, okay? So if it gets up there and we get to this outside edge of a distribution, which is a volume distribution, if we can't get up into here, we are going to reject this and we want to short it back to there. Just saying. So I want you to see where these levels are coming from. This is how you might construct a plan and then know where you will trade before we get there. There is that level, the 6110.75. That's the current high of the day. So let's look. Now let's get into trading, if you will, in Trader Lab process. One moment here. I gotta move some things around. One moment, guys. I'm doing some housekeeping with these charts. Just take me a second. Okay. And another one over here. Sorry about this. I just got too much stuff going on here. And I got to take these green lines off. Okay. So this is the RTH open. We have our levels. By the way, I label levels. Hope this is correct. I think so. Hold on, guys. Oh, maybe not. Okay, here we go. RTH open, 8:30 Central Time, my time. Now, right here, I'm seeing sweeps. So I'm looking, when I see a sweep, and I have a high probability statistic of taking out either yesterday's high or low, which is over about 80% probability. Past performance, not indicative of future results. So I know this is high probability. Also, I have the ETH high and ETH low. There's over 90% probability I might take out one of those. Well, 90% pretty good, and you have to vet everything for yourself. These statistics are available in the Trader Lab community, and there's, available to anybody who is interested in that. And this is where the fuel is, up here. So I have these locations starting out. There's another little piece here. This is the ETH volume point of control. It's the retail price. So I know starting out that I have a fair price from the ETH, the highest volume, the last auction. I have a high probability statistic here, and I have resistance up at wherever up north here, at 10 and change. All on the price map, which I showed you. That chart, by the way, I showed you at the top of the stream was posted before the RTH open. I don't know, about 5, 6 in the morning. I don't even know. But it was early. I start early. And I will work the ETH if I have trades that show up. Why not, right? I mean, that is what we're here for, isn't it? So this is that naked volume point of control, the retail price from yesterday. And then I have outside edges out here for potential targeting. So now I'm going to show you the trades. Now, these are structured trades. Now, I also want you to know that I also take trades that are not structured trades. It's not what I do. It's everybody finds their groove. Like I may trade short rotations. That's not, in my opinion, advisable for developing traders. It's to get the broad stroke. Most of us, when we're developing, cannot act quickly. We are intentional. We're saying, should I be, there's that kind of thing going on. All that uncertainty, which is part of the human condition. We are in an environment that's 100% uncertain. You're never going to achieve certainty. You only are going to achieve maybe, maybe. So if you cannot solve for something that doesn't exist here, in my opinion. You got to solve for what does exist, which is uncertainty. So the casinos have solved for that because they're also in uncertainty. That is our business model. Gaming. And gaming is only playing games that have statistical edge. So right here, I'm seeing the sweeps. And right here, I'm looking for a short because I'm testing my high probability, yesterday's high, and I'm assuming that there's buy stops here. And if I don't get additional buying above here and above this retail price, then it sets a short up for me. Now, this may not be your trade. I'm just going to give you some ideas. Your trade is not my trade. And there are probably days you're going to be very thankful they're not my trade because I trade in different fractals or time frames. There's no time in intraday trading, in my opinion, because the process or the triggering structures are created by the interaction of the participants. They're not going to punch the clock and say, I've got to wait for 5 minutes or 2 minutes before they leave, before the other participants reject the price. So for me, when I see the behavior, that's my trigger, not a clock-based process. So I understand time frames, been there, done that, believe me. Too many years, too many time frames, too many indicators, and always waking up at trader Groundhog Day. This is my first short, and it was right here. Why do I have it? I have sweeps, which suggest a rotation. I have liquidity in the book. I have yesterday's high. I have an outside edge. This is alignment for me, and this is different time frames, so won't go into that, but I'm just going to say this is all. You can learn this in Trader Lab, but you got to come to Trader Lab, roll your sleeves up, and commit that you're going to get an education on how to trade, and there's no secret sauce, holy grail, or shortcut. It doesn't work that way. So I took the short, I got risk neutral, and I was going for this is my target. Remember the naked volume point of control, the highest volume price. And I had the liquidity here. So to me, this was a good target. So I get risk neutral. I manage my trade. That's what I do. And after that, it's not up to me. And I got taken out. Okay. Now, is that a disaster? No, it's just trading. Now, what do I do? Well, now I know that even though I had sellers here, that now the shorts in this leg, think about how this might work. The sellers in here, including moi, once we got too low at this, in this rotation, which I have no clue because I'm going for this, and here is the reversal. So what I do, and this is an aggressive trade. I don't suggest anybody trade the open like this. It's something you got to be able to really operate because of speed. This right here is resistance. Chop, 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 break low. Micro volume structure is right there. It's too high. These participants in here said, I'm not paying that. Get out of here. And they left the store. Now we auction again. Sellers are here. Passive sellers are there. Passive buyers are there. Now, I don't know that until the buyer is here. So I know now there's a buyer here, but my seller is there. Right here, and my resistance is here because my sellers are in control in this structure. So I have resistance there. I have resistance here. And right here, I think it's all over. I make a new low. Now my resistance is here. Buyers are under the bus. This is what absorption looks like. And these icebergs are the absorbers of that buyer. Does that make sense? I hope this is making some sense. So I'm kind of mixing a few things together here for you. I'm sharing order flow. I'm sharing the auction. I'm sharing structured trades. That's kind of what's going on. So managing the trade. Now here, I see the reversal. Now right here, I have a choice. I can exit the trade. I have a distribution right here. This is my outside edge. So what this says, let's talk about language. Too high, this is retail, high volume, on sale. That's what this was. Break out of it, too high. Get under here, auction this. That's created by this. That's a consolidation. Break low. Next balance area, consolidation. So what I know is at the moment, and this is always developing, too high, leave it. Rotate, consolidation, high volume. If it's too high, leave it. Rotate, consolidation, retail price. If it's too high, leave it. If it's too low, leave it. And that creates the warning Will Robinson moment. So then the choice becomes for me, and this is what I did. And, you always, now I know that it might only come out here to this outside edge, and this high volume is what we rejected the last auction, which is this. So I had my stop here, and I knew the VWAP was here, and I was thinking to myself, I really should be a little further out. But I also know this is the first swing down, and that the possibility is we will come all the way across and squeeze these guys out. So I got out. That was the end of the trade. Now I'm saying to myself, well, should I be getting long, or do I just shop for another short? And I can't tell you the answer until I see the behavior. So let's look. Where's the stops now? Above this. This is the opening swing high. You do mark those on your charts, don't you? Because why would we want to be interested in the opening swing high? Because the shorts have their buy stops here. So once we reverse, there's a high probability, and I can't give you a statistic, that who's ever trapped, I mean, look at it this way. The longs over here got under the bus here. The shorts in this leg were thrown under the bus here. Can you see how the logic of this? What's making that alert? I'm not sure where it's coming from. Hold on. Did you guys hear it alert, by the way, going off? I'm hoping you don't. That yes, no, nobody hears anything? Okay. Was it loud? Because I might be able to figure out how to turn them off. Are levels anchors? I'm not sure what you mean, Truman. It's loud? Okay, hold on, guys. Maybe I can turn this down. Let me know if you still hear. Well, I'll hear them too. They're blowing my eardrums out. Okay, so this is the reversal, taken out, opening swing high. Now what? Now let's come back to our levels. Where are they? ETH high, over 90% probability, and this is our resistance to get into that upper distribution, which is there, right there, 1075-ish. Now, ish. 1125 is the bottom of the distribution. So I have a confluence of levels. This is the auction. So where are those? 1075, 1125. High of the day, 10, whatever it is. 10? I don't know exactly what it is, or is it 1025? Don't know. You guys can tell me because I can't see it. So this becomes the target. Okay. So for me, at this point, I did not have a long because I'm in the middle of nowhere. This is starting to bug me. I have these alerts. I do use alerts because there's too much going on for me. So I put alerts at key levels so I kind of wake up, and see what's going on. So this is my target coming up. So I did not get long. And I'm okay with that. I want to be short because I know if I come out here and I don't get through here, I can sell it. And then it becomes something called mean reversion. That's a specific trade plan in the Trader Lab, and you'll be coming here. So this would be the target. If I get a short here, I'm coming here, and then I'm looking to come out the bottom and get to where my target, that's still open, has a high probability, and potentially come out down below. So let's see what it does. So this is narrated. By the way, I narrate trades. I don't call them. You don't need to take my stop. I take them. It's not something, nobody's immune. Risk management and all that, it's all part of the business. So, I know how we feel emotionally. I certainly do. Believe me, I get it. I do too. But what I found was once I understood I was actually in a business and I wasn't playing a video game, I understood that all businesses have overhead and cost of production. If I want to be in a business, I got to pay to play, if you will. And like the casinos, they pay the gamblers. So let's look here. So I'm coming up. I'm not at my location yet. Now, there was something else here, I believe, at the time. Let me see if there is something. So this is my level, and I'm looking right here. Okay, it was 10 and change, 11, this area. Remember, it's nothing more than locations. And I always think of it like real estate. So I come up here. Now let's look at what we see. Now right here, doesn't this look like a short? Right? I was looking at this and I'm saying, is that it? And but it was too far away. So here I still have my aggressive buyers. And now I come up here. And I don't really see anything here. I'm above these guys, so the buyers are still in control. Buyers are in control here. So I have sellers here. Buyers, buyers, buyers. See them? What's going on here? Seller. Okay. Sellers are here. Sellers are here. Now, buyers are in control over here. You see, sellers are here, buyers are there. Now, what needs to happen here is if the buyers are going to continue, they're going to get above this guy and above this. So let's see what happens here. Rotate up. I'm below the sellers. So what's going on here? This seller is now here. Break. Now, there's one other little piece to throw in here. Where's the micro high volume structure? It's right here, and I break. This sets up my short. This is my entry. Stop goes here, and I'm going where? Mean reversion. Where does it come back? Over here. Where was my developing B point? I'm trying to remember. Can't remember this stuff. Notice where it comes. Another short opportunity. That was a report. You might not be able to deal with that. I understand. Actually, I think I'd have to go look, but I think right here I covered it. I can't remember anymore. I know I took this one and I saw the sweep and I got out of it. Then I got another short. All right, what did I do here? I can't, you know what? I take a lot of trades. I can't remember, but this is a short. This is still a short in the Trader Lab. So you come up into the report, you get this, you have if you have an entry, you can enter. What I covered, I don't remember. Either I covered here, but I know this was my next target. I got that target, so I've got to figure out how I did that. I don't remember. Truly don't. Oh, yeah, I think this is it right here. Let me show you. How did I do this? So I got short here. I covered this when I saw this, and I had the report. Okay, and I'm just trade to targets. My naked volume point of control has a high probability, so I want to go there. So now we're covering the shorts in this leg are covering ahead of the 9 a.m. report, Central Standard Time. There's the report. Now right there, I know this is resistance, so I know I want to be short because I rejected the test. This is the auction. Why did the market leave here? Because it's too high. If I come back, and I always think of this like shopping. Here the price is too low, and I have a sweep, and I had this liquidity in the book. So I knew I had to watch this, pay attention to it. And then I get the short covering, these guys getting out, and then resistance. Now, if we didn't have a report and I came back here and I had a trigger, I'd be shorting this anyway, but I didn't have it. So now I break low and I pull back. Now let's look at the structure. I'm going to just move this back so you can see the condition. This is a distribution. Now I'm getting into a little more profilage, and you can learn all this. It's not a 15-minute thing. You've got to kind of immerse yourself into understanding actually how the market works. And it's not about your indicators. It's about understanding how the market works. And it's not your indicator. It's the market. It's the participants. So I know this is the retail price. So microstructure, too high. It's right there. And then as I go up and quote time frame, as you think of it, this is a distribution. If I break away from it, which is what happens here, and then I rotate back, I can look outside this for an area in other words, a counter rotation for an area for a continuation short towards my statistical target. Took a long time to say that, but that's it. So now I know this is an outside edge of this, and it's called a low volume node. I'm going to put a little line here just to help you see it. And these are not hard and fast locations. They are areas. I want to remind you of that. There's no precision in trading. So we come up here, right? Okay, now let's come back. There's the break. There's the location for a short. Now, you might not be able to do it, but let's look. I took a short here. I look at it now and I'm going, how did you do that? I guess I did it because I can read it. Now, this is advanced. This is not something that most of you would be doing, but don't forget, I've got a little experience going for me. So I see this a bit differently. In other words, I see my sellers here, and my location is there. See where it is? So I'm looking for, and I don't know how far back it'll come. So I'm reading the order flow. I see a seller here, and I'm going, well, this might be it here, but where's my buyers? Here, and I had a buyer there. Well, these buyers are here. And I don't know until this buyer is above that seller and that buyer. Okay? So the buyers are still in control. Now I come up and I come to my location, this outside edge, and I don't know. Remember, I have no way to know, so I can't know what's going to happen here. I see my sellers. Now I have my sellers there. I have my buyers here, and I have my buyers here. I have my buyers here, and I have my sellers here. So right here, I'm looking at, I say I've got sellers, 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 and this seller gets below this buyer. And I have more sellers. So right here, I have a micro high volume structure. So this is resistance. So what I did is I actually sold it in here. And I was reading it. Let me just see if I could show you. Now, what works for me is I am putting my trades, and I call this a chassis. I'm looking what's going on here and what's my statistical probability. Well, this is my developing volume point of control. This is called mean reversion. So I'm in a outside-in trade configuration at the moment, and this is dynamic. It changes. So this was my continuation. Let me just make sure I'm in the right place here. Yeah, this is my short. Now let me also show you something else. Let's look at this. There's your high volume. So this is a short. Where's the outside edge of this? It's right here. Just watch. Actually, let me do that. Trying to draw, it's not my thing. You see this, if you look to the right here, this is the chop, 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 chop. This is the auction. Sellers are here, buyers are here. Hasta la vista, baby. Thanks for playing. This is a shopping price, a retail price, high volume. It's right there. That's called a high volume node. You can see it sticking out. Well, there's a low volume outside edge here because we stopped there. And there's a low volume outside edge here because the buyers were here. So that's what creates this. And this is a micro distribution. Now, all it is a distribution of volume. So don't let the terminology bother you. So this is too high. This is too high. That's too high. So when I break and I pull back, I can sell this with a stop over here. Or I break and I can sell this, right? Let me show you. This is called trading in fractals. So too high, break, potential short, going for this, pull back. Where's my resistance? Here. What happens here? My sellers. What was over here? My sellers. What's over here? My sellers. What happened here? Too high. What about here? Too low. Buyers above the sellers. Rotation. Now what? Where are the sellers? Here. What is this? Short. If I'm sitting here with the teeth chattering, which is normal, sellers are here. Sellers are below. Right here is the buyer. There's the seller. There's the seller. There's the trigger. Stop here. Watch. Where's the resistance now in the next structure, you ask? Watch. Now I'm going to stop doing this so I can move on. But I'm showing you order flow and the auction operating together. Sellers are in control here. This volume is too high. Let's just see what it does. Now, I don't know what it's going to do. Isn't that interesting? And where am I trying to go? There. And this will make you need that airline sickness bag. You ought to keep one on the desk. Target. Now, you're either done, or if you're trading more contracts, you're going for south of the border. Let's stay with it. This is Trader Lab. Now, you may look at this and go, oh my goodness, forget it, right? I understand. Now, what was that target we had below? Wasn't it this? So the developing volume point of control is mean reversion. This is the mean. If I come below the mean and I have a high probability statistic sitting over here, I'm going for my next target. You know, what are you going to do? Next target, there, out. That was a short sequence. I know it takes time, but I hope you get something out of this. Are you guys tracking? How are we doing in YouTube? GA, I don't use the market profiles anymore since we have volume. Volume is just more accurate. Something that's time-based, standing alone. The only reason we used time back in the old days was we didn't have volume. So we used 30-minute bars, basically, with brackets they were called. But the concept is the same. But the representation of time, the assumption was that there would be the more time you spent at a price, because so it measured time, the more volume went off at the price. So it was sort of a proxy for actual volume. Now we have the volume, so I don't use the market profile to trade specifically. I do have it up on my platform because I want to see things like singles, some of the more standard old stuff, but I don't really use it for much. It's just it's there. I started with market profile when it first came out into the public space in 1980s. And Peter Stoudemire, if you probably know, he created it, and he actually taught me the market profile. And then I got real smart. I used indicators with it and totally messed it up. And I don't mind telling you that, because when you're a developing trader, you get all kinds of ideas. So what I did is I took something that did not have an edge, and I put the market profile as part of it to make it better. So all I did was make it worse. I created more conflict and ambiguity. And retail trader, our nature is to look for certainty and confirmation, which of course doesn't exist here. So this was the target. The short is over. I'm going to jump ahead now. There were other trades we had and more trades. I'm going to come now to real time and try to get caught up. Okay. Now let me see if I have a trade here or what I've got over here. I got to look back here. A variable high volume node. This is resistance right here. I got to mark it. I haven't seen any of this. So I'm just going to try to get caught up with these levels. And I'm also going to point a couple trades out to you that I see came along here. And these are structured trades in TraderLab. So this is a short, but let me show you what it is. It comes from here. This is called the variable high volume node. Now we have a couple other trades here. Now that I'm looking, let me just make sure I'm not missing stuff. This is a short. VWAP to VPOC if it fits your trade plan. And if we come up here, this is a short. And you also have these outside edges. This is called mean reversion. So when you're in a rotational trade, what we're looking at is what happens here. So if this is too high, there's the shopping experience, retail price, and we leave it, then we're not going to pay that. But we might come back because we like to shop at this store and check it later. So if it comes back, that's an opportunity potentially for a short or not. Then if we come up here to VWAP, we have a trade called VWAP to VPOC, and let's see if that one fired. I don't know. Can't tell. No. So it did not get here. This trade did not fire. But here's what it did. Mean reversion. So here's something you have to think about if you're in TraderLab. Are you trading outside in mean reversion, or are you trading the level, the structured trades? You can do both. So what this is called mean reversion. This is what I've been trading all day, is outside in rotational trading. And I post my trades. I don't call them, but most of the time, what I'm doing in TraderLab, and I do quite a bit of posting in there. Thank God for voice to text. Otherwise, I wouldn't be able to do it in trade. But I don't call trades. What I do is I call behavior. Observe such and such. What about this? What is the condition of the market? This is an outside in trade. This is a short. Trader Lab. Now, what you have to be able to do if you put this trade on is you got to figure out, does it qualify for you? If you take this trade out here, your entry is going to be like in here or here. This is a very tough place to enter, and if it doesn't fit your trade plan, you don't take the trade. That's all there is to this. Let's watch. Where's our edge? Let's look. I'm going to draw the little box again. What you're going to observe here is I'm doing a consistent process. The market is random, so just like the casinos. Casinos, everything's random there too, 100% uncertain. And the part that's uncertain in a casino is the cards coming out of the deck or how gamblers play the cards. What's not uncertain is how the gamblers play, the house or the casino plays the game. So if this is too high, and my micro high volume, let me point this node out to you. This is the chop, chop, chop. This is the auction. Buyers are here. Sellers are here. Right here, I get a buy. I get a sweep. That suggests upside rotation right there. Now, this is where my sellers are. Selling iceberg. These are buy stops. Also, I have a rotation up with only 3 buy stops. Is it possible that we're seeing exhaustion? And again, I say, is it possible? Because all I can do is ask the question. I don't have the answer. What I do have is I'm at this outside edge, which is called a low volume node. And it's right there. So I now have these pieces that are coming together. And remember, the auction is really all built on what the participants do. And I don't know about you, but I want to follow what these guys are doing. Because when I trade, I'm trading against these other participants. And yes, I take stops, they get paid. So here's the retail price. You can see it there. Here's the outside edge of this distribution. And what it is the market's rotational here. Well, if I'm going to get in the market, where do I want to get in the market? I want to get in the market out here. And yes, if it presses through here, I get taken out. Me and everybody else is short. There's your retail price. Here's your break. Here's your test. This is another trigger. So you have the test of the trigger. You can put a limit order here or put a limit order there. It's up to you. Stop goes up here. You get picked up, and then you're going to go to get risk neutral, which is you're looking to come down to the other side out here someplace, and you need to look left to see where the stops are, which is under this leg right here. This is where your scale would be, which is at this outside edge, and then helmet. And there's more. Whoa, there's more. I didn't know. So you'd be short. So that's the last short. Now there's more. Now we come back here. We come to the IB, and let me just make sure something here because 9:30. Okay. This is called, right here is the initial balance low. We have 2 structured trades here. One is what's called a continuation trade, and the other is a mean reversion trade. Now, we had a conversation about this in Trader Lab because for me, the exit was coming down here for everything. So it was there and then here. And then the trade was over because we have over 90% probability of taking that out or the first hour's high or low. Be either one, clueless. But what do we do at the high of the day? We rejected a key location. That's why for me, it was only shorts, except as an option for me or anybody else in Trader Lab, you can use this as a trade management. In other words, this is a long, except for me, there's 2 pieces. And this is very interesting, and it's actually conflicted. One is cover at the target because we're in balance. It's 2-sided trade. And but I know I want to be short. However, this is a counter trend trade. Do you trade counter trend? If you're not profitable, not a good idea. Where does it go? This is a long. If you trade counter trend, what's the target? That is right there. And then what do we get up here, which came from over there? We get a short up here for continuation. To where? Back here for a scale, which is the trade I'm talking about, and then out the bottom. Let's watch it now. So, short, right? You got, trailing, 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 trailing. You could be taking it. Well, you're not taking out yet because you're here. Selling trigger, resistance, trigger, resistance. Right here, I'm concerned it's going to continue up. Breaks down, looking good, Lewis. Resistance, break low, resistance, break low. Taken out either here or there. That trade is over. And what are we doing? We're in two-side trade, you see. And what this sets up again is an IBF, wherever that is, which is once you come back across these distributions and you come in here, this is a structured trade to squeeze out the shorts in this leg. And let's see where we came. Since I haven't seen this, where do we come? Outside edge. Now, you don't know. So when we come back across this sets up the same long to there. And then what do we know? Let's go back to what we know. Where's that level again? Let me put a line over here. You know, it's so long ago when that level came. So let's come back and let's just see what happens. The level is, where is it? There. So for me, and I haven't seen this, this is so I have this area and I blow through it, so nothing to do. And my next level for trade is here because it was too high. I rejected it. So I'm coming up. Now, this is my level. So when I come to a level, I'm going to be I start stalking a trade. And I want, obviously, the high volume, which is there, was too high. We rejected it. Remember, I'm not paying that. And then we broke away. There's the low volume node. Let me label it. And these nodes exist before we get here. So I don't know. So you guys understand. I don't know where it's going to go or how far or anything. What I know is what the language says. The language says this is too high. That's why this is there. And I know I can come out here and do this, or I can come out here and do this, and come back there. And then maybe come, wherever it goes, part of the thrill. So resistance, outside edge, resistance. Okay? So here, questionable, but that's support. No range. Push higher. Next area, outside edge. Range. So let's look at it. Micro high volume structure. There. That's where the volume is, and I break away from it. Change in behavior. Here and here. Let me draw my little box around it. Just so you could kind of see something consistent, I just do the same thing because I don't want too many variables. So let's see where it might come back. This right here, where it breaks here and tests here, is your entry. If you missed this, if it came back up here, you'd have another entry. Didn't do it. So this is the trigger. Remember where the support is. The buyers were here. The buyers are here, the sellers are here, and the sellers are there. There's the iceberg. So I don't know right here. When it breaks and I have alignment, remember, see how the pieces fit? And I know this is too high. It's a short. And then the stop is either here or out there. And then you're coming across and you're looking to come out here. Let's see. And why? Because you have stops under here, and you have stops under here. And you got liquidity came in down here. Let's just see how this plays. Well, sorry about that. Didn't even know. So anyway, we're current, right? Hope you're getting something out of this. Is this too complicated for you? Does it take too much work? Well, let me see. If you got short in here with a stop here, it's a palatable risk. It's about 3 points. And what is our potential with the two-lot configuration? Number one, get risk neutral. So if you're short in here, and if the trade does its thing, you're going from 90 to what? Somewhere. Maybe here. And then it's trade management. That's almost a 20-point trade. Is it worth it? Is it worth the effort? Justin, VWAP, just standard VWAP, nothing fancy. It's anchored to the RTH open. VWAP is, it's a piece. It's not the major piece for me, but we do have structured trades with it under certain qualifying conditions. I don't focus on the VWAP. I'm a minimalist. Because I'm very much order flow oriented and auction oriented. I have found for me, when I add more, and the VWAP is fine. I like using the VWAP, but I only use it for certain trades. Other traders do a lot of different things with it, and it's, whatever. But I find that if I have more, I create conflict for myself. Let's watch the behavior here. So this is the short, Now, trade management, right? Let's look right here. Microstructure is here. Break low. This is resistance. The trade could be over right here. And it doesn't matter. Now, if it matters to you, but where's my outside edge, right? Where was it? Where was it? Do you think if you understand this, that you would then be looking at this location? I should have put a little LVN on there, but I know I mentioned it to you. Because this is how the auction works. And what I do is I'm not trying to get it. I don't know what everything is. You know how it is? Gee, I could have got such and such. What does that have to do with this? Yeah, I could have sold the high and bought the low if I only knew where they were. Since I don't, and it's not my job as a trader to, quote, predict, then all I can do is use what I have, which is the footprints of the participants and where they activated. So I know down here they were activated. I also know I got this sitting here. So if I kept going, I'd be targeting this high volume. But the market doesn't have to get there. What can happen, and I'm not saying it will happen, I can come out here. This is still too low at the moment, and then I can do this. Revert back the other way. So I just go, well, all right, I'm in rotational trade. I'm in a downtrend. I prefer shorts only, just me, not a recommendation. And when I get the counter rotation, I'm just going to take my trade off. I got 20 points in the thing. Why would I not think about that if I see this? Does that make sense? Yeah, Justin, it's just the RTH open. How we doing? Yeah, Sandor, airline sickness bag, and a bottle of Pepto-Bismol chaser. So this is our outside edge of this trade. And this was too low. You see how I'm putting it together? Now, I'm not saying to you at all that we're going to stop here. It's not my job. My job is to put the trade on that's vetted and has a statistical probability of doing something that works for me. And then I monitor it as it goes around through these auctions. I'm also aware of where the stops are because retail traders are like lemmings. No offense to any of us, but they put their stops at the same place. Where's the stops? Remember I said under the swings. I pointed this out to you before we got here. I think. I can't remember. But do you see why if there's sell stops here, 183, and I have buying icebergs, that I can get a potential rotation? Potential, that's all I have. So for me, this is my outside edge. Trade could be done here. Next. Does that work for you guys? This is a Trader Lab. Now you all construct your own trade plan. There are some traders in Trader Lab who are going to get short, and they're just going to get risk neutral, leave their stop up here, and they're going to go to the gym. We have one trader in particular. He has a Barca Lounger, and he kind of takes naps. Now, there's also, we did take out yesterday's high, and the probability of taking out both yesterday's high and low is not high, but it's not impossible. So if you're sitting short and yesterday's low, I think is possible, but I can't trade to what I think might happen. I have to trade what I see and just follow a plan. You know, some of you may think this morning that the market was going, to the moon, and it might have. That's all I can tell you because I come in prepared for both possibilities because I don't know. But once I have my levels identified, I'm looking for behavior at levels. So this is an important level for this. If I fall out of this, then I got this and I got that. And I got this thing. Don't forget, we're looking at this too. And this is sitting right at this high volume. Remember, I was talking about this as a target, but I'm perfectly okay just being done with the trade right in here. So just the way, it's all fine. So we got to watch this here for the break high or the break low. So this is a fractal. This is a little trigger. You see this little node right here? That's the high volume in this little auction. If it's too low, the buyers are here. The sellers are there. If I come across this little volume, it's going to create a short-term reversal. That's a trade management opportunity for you. And why is this important? Look where it's at. Location, microstructure. I'm above the sellers. Trade is over. For me, not a recommendation. Can you see how you might use the auction? Any questions? This is the Trader Lab. You can learn this. I believe anybody who comes to Trader Lab and does the work can learn how to trade. Now, whether or not you do the work, that's, up to you. It's your business. And also, you're going to have to go through a learning curve that is not pleasant. We all want to trade. Who has time to learn? Yeah. But what the Trader Lab is really different from what you're going to find out in the mainstream market guru YouTuber type, it's different because I've walked in your shoes and we've all done really the same things at different times. I just did it in the early 1980s when technical analysis, the standard technical indicators were just becoming available in the retail space. And I was an off-floor trader. So I ended up managing money and being a trading advisor and a fund manager, all this kind of stuff. But it was through a lot of wear and tear and pain and frustration because I didn't understand the business I was in. Just like most of you, I thought right mix of indicators and time frames, and that's trading. Well, I didn't understand that I was not in a get confirmation and prediction business. I was in a gaming business, and I was solving for the wrong thing. And that's really the reality of it. Most retail traders, because of our primal wiring to avoid risk, are looking for confirmation. Isn't it logical? So we spend our lives curve fitting looking for confirmation where it doesn't exist. Just notice the behavior. Can you learn this? And can you learn it? Not, I'm not saying you'll be a successful trader, because the thing that's really going to be difficult is not learning how to trade. It's being able to trade because of your emotions. The hardest part of trading is how you feel, your fear. And then all the things that are unleashed in your brain, the chemicals. It's just really difficult. You can become very technically astute and not be able to trade, and you will not succeed. Now, whether that is going to be you or not, that I cannot tell. I believe you can learn to trade in Trader Lab if you do the work. And yeah, it's work, because to be able to trade, you have to put the time in to understand and learn by repetition what to anticipate, and then recognize different structures and the language. This is a foreign language. That's how I see it. So I'm reading a language here, and I can read it in any time frame, and so can you. So if I'm trading just this, I'm okay with that. Other traders are trading, let's see, down to here, which is possible. And it doesn't matter to me, because that's not my business. My business is taking the trades that show up, taking the rotations, managing my trade, be thankful for what I get, and take my stops and let it go at that. I can't go beyond that, because I have no control over anything other than myself, hopefully. Does that make sense? Let's simplify trading. Yeah, Justin, the outside in is a specific condition. Justin's mentioning about the outside in trade. In the Trader Lab, we have specific trade plans for the condition of the market. And the other issue with the condition of the market is it's always changing. So it's a narrative. So it's if this, then that. If not, then what? If this is too high and I come to an outside edge, which could be here or even out there, and I see my seller, then I'm looking for rotation back in to the mean. And then if I fall out, I come to back to the other side, which was there. Notice where we would cover the trade. Why? Location, 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 trigger, trigger, trigger. This is a buy trigger. Now, for me, no long. Just cover the short. Now, it doesn't mean that this will not come all the way back here. In fact, there's a reasonable shot it will, and you'll get to see it. Now, I make a choice. Do I want to get long and squeeze out the stops that are at VWAP in mid and mean revert? This is a trade you could be taking in Trader Lab. Now, I don't call them. I'm just pointing out what you can do. And it's not mechanical. How about this? Do you want to be long or short? Here's a good question. Do you want to be long or short? Now, if you say you don't know, then you got work to do. You also could be saying, well, I want to be long for the counter rotation because I know there's stops here and here. I also know that if I do get long for the counter rotation, I have to scale before the mid and the VWAP. And then if I survive the counter rotation from mechanical retail sellers, I will then take them out maybe and come here. You see what I'm saying? Let's watch. This is Trader Lab. Now, here's the other part of this. You could just take the short and be done with the trade and go back in the Barca Lounger. Or, subject to your skill set, you might be taking a counter trend trade, but you might also be taking a mean reversion trade, which is this. What was the short from up here? A mean reversion trade. What is the long? from down here. A mean reversion trade. What is the trend? Pick one. For me, I believe the primary trend at the moment is down. So I would either exit my short and let it go at that, and then let this go, or I put this trade on long, and where's the entry, you're asking me? I know you're asking. I gotta have to show you. Market mechanics. Whoop. I think I'm making big trouble here. Let me try this again. Actually, this is not in the right place. 1 second with this. You'll see the little distribution. That's what I want you to see. So you can see where this shows up. See that little low volume node there? So this is why I would cover the short. Because this is where the reversal took place. There's the long entry. And you're going for this and this. Does that make sense? How are we doing in YouTube? Are you guys with me? Please give a like, give a thumb up. This is Trader Lab. I believe you can learn this. That doesn't mean you can trade it. You can learn it. But it's going to require maybe a little different process in your mind and an understanding of what is going on here. Why would this be a long? Why would you cover your short? You see the long? So the long is right there. And then you're going, you got to scale here and anticipate selling here. Let's see what happens. Now, it doesn't have to do that. Why would I scale here if my next target is here? Because we only might look left, get above here for the stops, run to the mid in the VWAP, and get retail sellers, which creates the counter rotation and the potential to come back there. So for me, I have to get my risk off, which is here. Let's watch the behavior together. Is this making sense? Now, I don't know if you want to get long at 74 or wherever, 75 to go to 82.5-ish. Would you? And then hold the runner or possibly here and then maybe back here. Are you interested in that trade? How about YouTube? Give me a like and let's see what this thing does. Remember where the stops are. They're sitting here. So let's watch. So let's see what happens. You're looking to scale ahead of this, and then you're looking to come across. Your support right now is this. And if the trade doesn't work, you take a stop. That's as deep as this is. But looked pretty good to me. So if this is any good, it's got to hold this area. Because this is where the shoppers said too low. And that's what created this. Now, this little structure up here is too high. We can put a little line here. And now we want to see what happens here. Sellers are still active here. Let's see what happens. This is our support. Do you guys have any questions? I got about 15 minutes. See the behavior? So what do you do with this thing? Well, if you got long there, your stop is there. So you haven't gotten thrown under the bus yet. Resistance is now here because we had these icebergs. They were selling here. If I get above the icebergs, I'm still looking at this and maybe that, and then you got to just manage the trade. Let's see what it does. And these are not trade recommendations. I know you're probably tired of hearing that, but I'm kind of required to say it. Because anything can happen, right? This is the Trader Lab community. This is our library of webinars. Thanks, Ned, for curating this. I suggest if you come to the Bookmap Discord Trader Lab community, there's a link in the bottom of YouTube. There's no cost. This library, start with the primer webinar. It's a high-level overview of what you're seeing here. Why? Isn't it interesting? You need to know why, don't you? Are you a trader or a gambler? Why most traders using indicators fail. You might be curious about that. Are you trapped in Trader Groundhog Day? That was me. Trader Groundhog Day is when you work hard and you wake up with the same results. Let me see if I can move this over. I don't know. And then this is what's going on in Trader Lab. Let's see if I can get it back. Just lost it. A lot of interaction between the traders. You can see there's a lot going on. It's a very supportive community. A lot of posting, a lot of charts, a lot of trade discussion. Me, of course, I'm in here. A lot of posting about what's going on, what to be looking at, mean reversion, what to look for. My idea here, and the reason I agreed to do this was what I went through was horrendous as far as my learning curve. Because just like everybody else, the difference is when I started, there was no internet, no computers. You bought a book or went to a seminar. That's all you had. And there were no off-floor traders. So all my friends were floor traders. It just added, and they thought I was out of my mind. And back then, technical analysis, as we know it today, was looked at as voodoo. I mean, it was looked down upon. It was like you're out of you're nuts. It was all fundamentals. So things have changed tremendously. We're not in the same world we were then, of course. And when I got started with trading, it was very much classical bar charting, measured moves, the usual stuff, head and shoulders, and all that. So I thought it was predictive. Well, it's measured moves. So I spent a number of years predicting what was going to happen. Well, you put a lot of energy into prediction. What else are you looking for? Certainty. If you're looking for certainty, everything you do is built on a belief system that seeks certainty. Well, what about if you're in an environment where there is no certainty? How do you function with that? That's kind of what happened to me. So my learning curve was really, really bad. And I don't consider it my fault because as the technology was developing, I was always at the forefront of it. When PCs became available, and my first computer was an Apple IIe, very exciting. And then I think was it a 286? I don't know. IBM, came out with their thing. It was really, I think it had, 1 gig RAM or something. I don't know. But, and I started building trading systems, which were basically taking indicators and hybrid indicators and putting them together to create more certainty, because that's what optimization and curve fitting is. So I went down this road thinking that it was measured moves and that if I could create more certainty, I can put these pieces together and create a system. And I did it across different asset classes because I was managing money. There was no day trading back then, really. It was position trading and swing trading. So that's what I did for years, as managing dollars and all that. So I put positions on and then not sleep. And a lot of it was bonds, currencies, and then the large S&Ps, the big ones, I would swing trade those things. And those are serious. So not like the little minis that we trade today, that was real money. So I'm just saying that's my background, and doesn't mean anything more than I had to figure out why I wasn't succeeding, even though I had winning trades and profitable months and all this along the way. I found that there was something not right with the whole thing because it was continuously breaking down. So I actually had an optimization schedule where I would re-optimize my process, and it was a rolling 2-week thing. So I'd be taking a month of data. I think it was a month of data, or maybe it was 6 weeks. This is a long time ago. 6 weeks of data, optimize on 4 months, and do walk forward testing on it. I think that's what it was. And then every 2 weeks, I'd always be doing this loop of optimization. And I'm only telling you about this to let you know that I think I really exhausted my logic of what I thought the business was. And it kind of dawned on me that I was missing something. What was I missing? I'm doing everything I think I'm supposed to do. I'm got the latest technology. I think I know what's going on. Look at these oscillators. They work. I just have to tune them a little bit. And, here's these rotations. I'm going to use 15 minutes. I'm going to integrate it with 60 and, all the stuff we've all done. And I did it over and over and over and over, and then keep tweaking and tuning and then custom indicators in this mix to squeeze out the risk and create certainty because of my primal wiring and my desire to avoid the pain of loss. And you're not even conscious that it's our reptilian brain that's driving the bus here. Remember what we're looking for. This. You do notice this, don't you? What is this? There's a long. This is the Trader Lab. Now, what's going to happen here? I'm as clueless as you are. But what I do know is how the market works, why it does what it does, and what it might do, not what it will do. What do we know about this? There's stops here, and there's going to be potentially sellers here. So for me, there's a few ways to play this. If I get long, I just want to cover, I want to get risk neutral. Whatever the distance from entry is to failure is my stop, okay? The job of the first contract is to cover the risk on the runner. That's the minimum configuration. And as a developing trader, what I always suggest in Trader Lab, a minimum 2-lot configuration. It allows you, of course, we all take full stops, so that's part of the joy. But if you have a statistical edge and you understand market mechanics, you want to get risk neutral so you can manage your emotional state. So when you get long here and you get this and it rotates down, you don't hit the plunger and bail out here. Because now you have covered your risk and it has to fail for you to get taken out. That's what allows you to hold this trade up to scale here. That's all I can tell you about it. Or you're entering here and it's the same process. Where's the stops? Above here. Where were the stops over here? Right there. If I come back, where am I coming? Above here, maybe. And there it is. Where else do I have stops? Mid and VWAP. That's the reason why. Are you guys tracking? Is this making some sense? Sandor, sleeping with the big S&Ps? Not good. It's a swing trader, but I built a system for trading S&Ps. S&Ps and bonds, I did really a lot. I built a system for swing trading. It was a 2 to 3 day swing. It was really pretty cool. But like all of this, it can get nasty. And I had the same issue with currencies. I would, back before we had currency pairs, you'd actually trade them outright. Like you buy a yen, sell a D mark or something. And we didn't have pairs. So you actually, or you go in an interbank market. So it's really different, early on. Everything changes. We didn't have algos. We didn't have a dome. We didn't have any of that. We had the guys on the floor. They were your human algos, so we had all that. So it was, different world, different technology. We didn't have technology, really. What we had was a timestamp. You wrote your order on paper. You picked up the phone. You called your guy on the floor who was standing at the edge of the pit. And then you'd get your fill while you were on the phone. And that was lightning speed. Anyway, yeah, it was AC. But the thing is, the leverage was much higher because we're trading the large contract. And back in the mid 80s, and I think the S&P, I'm trying to remember, I think it started in 1982. I can't remember. We called them pinstripe pork bellies. So just so you know, don't forget, futures was commodities, So I was a commodity trader. They didn't call them futures. They called them commodities because the primary thing was commodities, grains, that kind of stuff, So it was really the grain trade. So when I first came in the business, I was brought into the business by one of the largest wheat traders on the floor in the world. And, and so, I started with grains actually, but I always had a thing for financials. And before bonds, there was T-bills. And I can't remember anymore when these contracts came, but I was trading T-bills. And then I think it was bonds. It's too long ago. It's like 45 years ago. So I really don't have much memory. See the long, see the target. Would you be able to sit through this? What would your emotional state be? This is the question, because the problem is how you feel. And the feeling comes from triggering from your reptilian brain. Danger will, warning Will Robinson, go the other way. Bail out of the trade. Oh, I'm going to take a stop. Have any of you guys, now this is a ridiculous question, ever bailed out because of the counter rotation? Of course. We all have. If you're in Trader Lab, you're going to learn about your emotional triggers, and you're going to understand that you can fight this problem because you can develop an understanding of the mechanics of the market and statistical probabilities, which is what all this is built on. Remember, casinos, what do? They don't know the outcome of anything either. They're just as clueless as we are. But what are they doing? They're playing games that have a statistical edge that favors them. And they do pay the gamblers, and they do buy you the cocktails and give you the ticket to the buffet. This is our first primary target. Why? We're anticipating a counter rotation. Doesn't have to happen. Why? Retail trader behavior. What do? Sell the VWAP, sell the mid. Thank you. They might win. Where does it going to go if they're right? Here. What happens if they are wrong? We might get a rotation. They get absorbed. Buyers are here. Buyers are here, right here. This was our resistance. Look where it is. Look where we pull back. Interesting. We get through here, we go there. Please give a like. Please give a thumb up. Hope you got something out of this. Subscribe to the channel. Thanks for visiting Trader Lab. If any of you guys are interested in the Trader Lab community, there is no cost. There's a link in the bottom of YouTube. You can access the Trader Lab, the Trader Lab community, all the resources, the library of webinars, and there's a lot of additional education in the Bookmap server. It's all available at no cost. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, algorithmic behavior, and a lot more. And there's one final thing. There's the new version of Bookmap. You can trade funded accounts with multiple account distribution. That is now available. And there's more. Go to bookmap.com. This is just being made available if you're trading Apex, Top Step, any of those, and you want to distribute over multiple accounts. You can now do that if it's available. And there's one more. I almost forgot. If you have the digital version, the free digital version of Bookmap, which you can download at bookmap.com or come to Trader Lab, use the link down there. You can download the digital version, no cost, or you have the global version of Bookmap. You can get temporary access to all the add-ons so you can try them out. Stops, iceberg detector, sweeps, absorption, all the bells and whistles. That's also available. And if you're interested in that, come to the Bookmap Discord Trader Lab community. If you don't have the free the free digital version, you can download that and get all the add-ons. I just heard about this today, so I wanted you to know. Thanks, guys. Thumb up, please. Thanks for visiting Trader Lab. Look forward to seeing you tomorrow. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, circle arrow, build out your trade plan, build unconscious competence so you can anticipate your trades, and when they show up, you have a process to engage with the other participants, and over time, if you do the work, realize a statistical outcome just like the casinos do. Take care, guys. Don't forget to leave the like. It helps the stream.